Can you hear me?
Hello, hello everyone. Can you? Yeah, I could hear you, Lawrence.
Great.
Can you hear me? Yeah.
Yes, perfect.
Okay, great.
Hey guys.
Okay, so welcome everyone. I'm the host tonight. Let's wait another 10 seconds for the last people to join.
How many people will be joining?
How many people are joining?
Yeah.
That I don't know exactly.
By the way, your name is backwards behind you. Is that intentional?
That's the startup club.
Yeah, but it's all in reverse. Do
I
you see
don't know.
that, Simon?
Yep.
Yeah.
I think it's
no,
just
not
like I think
intentional.
it's maybe it's mirrored or something.
Okay.
Yeah.
Well, I'll fix it till next time then. I didn't notice that actually.
Okay.
Thank you for noticing.
As long as you don't have it called the Start Down Club, we're in good shape.
Okay, welcome everyone to the Real Estate and PropTech Pitch Night organized by the Startup Club. If you want to leave your contact details in the chat, you can introduce yourselves, and for example, leave a link to LinkedIn, and you can also say what you're doing shortly. I will be sharing in the chat the link to the pitch decks of the presenters of the evening. And if you have any questions to the presenters, you can use the general chat or send a private message. So yes, my name is Mathilde Bade, and I am based in Prague in Czech Republic, and I organize pitch nights at the Startup Club, aiming to introduce advisors and investors to selected startups during our online events. Currently, we host pitch events on different topics. We have also fintech events, edtech, health tech, green tech, agri-tech, and fashion, beauty, and luxury. I will share during the call links to sign up for free tickets in the chat. And today's event is presented in partnership with BAFO Group Global, experts in real estate and PropTech investments worldwide. And we have tonight four companies. And the first one is called Chesterfield Faring Ltd, presented by Lawrence, and it is specializing in real estate and corporate finance. Second pitch of the evening is PropertyLens, digital tool for property risk assessments, helping home buyers make informed decisions, presented by Bob. Third one is BreezeMove, a platform that simplifies the home moving process, with Phil. And the fourth one is VePa, sustainable vertical parking solutions and mobility hubs, with Simon. So the event should be running till about 7:45 Prague time, which is Central European time. So each startup will have 10 minutes to pitch, and there is 10 minutes for feedback and questions from the advisors. I will be putting on a clock at the beginning of each pitch. Yes, and so now we would like to ask the advisors to introduce themselves at the start of the call. We have two advisors tonight. We have Daniele Gambero and Zakaria Alami. So if Daniele, would you like to introduce yourself? Or Zakaria?
I don't see her on the list of people.
Zakaria is here, or?
Yes, I'll present myself. So
Okay, great.
I'm Zakaria Alami. I'm currently the Director of Business Development at Schroders Capital Real Estate. We are a company that invests across asset classes, so everything from the listed to the private markets. The Schroders Capital part is focused on private equity, real estate, infrastructure, and fund of funds. So I cover the real estate part. I've been with the company for 4 years. Prior to that, I was with Greystar, which is a residential real estate investment management company based out of Charleston, South Carolina, where I helped set up the business in the Netherlands, Spain, and France. And prior to that, I was in a venture capital fund and a startup. So quite familiar with the space and happy to be here.
Thank you so much, Zakaria, and welcome to our event. I do not see Daniele. He hasn't joined yet. So I would say we will just begin with the first presenter, and Daniele will join later. Okay, so the first presenter tonight is Lawrence. So Lawrence, whenever you're ready, hi. You can share your screen and you can start the pitch 10 minutes.
Oh, okay. I'm not sure how to share my screen because I have my people do that normally. If you could put it up, you have it, I think. The deck I sent.
Let me see.
Or we could send the deck to everybody post conference and I could just talk, whichever you prefer.
Yeah, so maybe it's easier.
Oh, wait, I see a thing here that says share screen. I got it. Here we go.
Okay.
I think I found it. Is that it? Do you see it?
Yes. Perfect.
Yeah.
Okay. So I started in the real estate business in 1976. I started this company, Chesterfield Faring, as the founder in 2006. My immediate job before that is I was CEO and chairman of the largest retail leasing company in Manhattan. And before that, I was director of fund management for Sumitomo Real Estate, where our entire enterprise had 23 trillion in assets. So we were the largest company by assets in the world at the time from 2000 to 2004. Before that, I had a joint venture with a guy named Sam Zell. I'm wearing the hat from his memorial a year and a half ago. Sam was one of the largest real estate players in the US. He had just sold, in 2007, he sold equity office properties for 39 billion to Blackstone. He died being worth about 6 billion, but he was one of my main mentors on how to buy distressed debt and how to buy distressed assets. First in Japan, and then we did a lot together in the United States. I interviewed him 2 or 3 times over the years, and he is a close friend as well as a mentor. In any case, what we're looking to do is take real estate to the next level, which has been talked about for the last decade, but nobody's been able to execute it yet. They haven't had the right vision how to do it. And it's called tokenization, which is similar to the concept of CMBS, which I was involved with in 1991 on the first one done with DLJ. I'm sorry I'm talking so fast, but I only have 9 minutes left. So the idea of tokenization is to make the assets that are traditionally only available to high net worth accredited investors and institutional funds, not only institutional real estate, but under the radar real estate that the average retail investor cannot invest in. And it allows a company like me to go ahead and offer these to retail investors, giving our investors the ability to buy wholesale with us and then sell them retail as an exit. So we're going with a platform called T0. T0 is owned by ICE. ICE owns the New York Stock Exchange. So they're a fully legitimate operation. They have 45,000 retail investors on their platform today. They're very easy to check out on the web, both on their website and a general view. And we've already retained them. We retained our accountants, which is called CBIZ, which was formerly Markham. The guy running this is the top digital assets attorney and accountant in the United States. And then we have our attorneys are a group that only do digital assets. So the idea of tokenization is it has 3 or 4 benefits compared to other publicly traded vehicles for real estate. The first thing is we're doing it under a Reg A Tier 2, which was under the Job Acts in 2012, that allows us to do limited reporting to the SEC and to the world at large. And as a result, our operating costs to stay public are only $120,000 a year. If you have a public REIT or a public company of any scale, and even a smaller scale, it can cost up to $1 million a year for reporting requirements. So the cost of carry is substantially less. Secondly, the benefit of these tokens is retail investors can buy them, sell them. They're fairly liquid. And it allows our existing investors to take tokens, and then they can decide when their exit is, whether they want to take ordinary income or capital gains, if they want to return or not. Our goal is not to give distributions. It's instead every day to increase the value of the tokens so our investors can decide when their exit is and benefit by an optimal number because we're creating wealth inside the tokenization. One of the problem with REITs is they always trade at 85 to 90% of their net asset value because people take into consideration tax liability, wind down costs, and sales costs when you sell the assets. With our tokenizations, because we're selling the enterprise as well as the assets, we should be trading between 100% and 105% of net asset value. So our value is actually greater than what we're trading for. So as a result, we may be at risk at some times of hostile takeovers, but it's highly unlikely because only we know how to operate these assets properly. Our first asset is a very high-end 20-unit townhouse property worth around $20 million in Dallas. It's in the best location, 100% property. We're just leasing it now. We have 13 out of 20 leases in place and occupied. We have 2 more we're negotiating, and by April, at the run rate we have now, we'll be fully leased. We plan to refinance it right before we do the tokenization to reduce our interest rate and our debt amount. Right now, we owe $11 million. We plan to delever it down to around $8 to $9 million, probably $9 million, at a lower interest rate. And then all of our existing equity holders have agreed to convert to tokens, so we create some liquidity. Of the 45,000 investors, we think quite a few will be active on it. Now, there have been about 5 properties that have been tokenized, but they were just tokenized to check it out. They weren't planning on building an entire infrastructure and platform for tokenization. We plan to. We have a sister company called Red Blocks, which will digitalize and tokenize properties for third-party sponsors, in which Chesterfield will be a co-sponsor. But all of the Chesterfield Faring assets, and we have about 150 million of existing assets we control, all that we bought at fire sale, that will be selling at between wholesale and retail values to tokenization. So what we're looking for right now is about $1 million. It can be a bridge loan or $1 million investment. That's to help pay all the costs of the IPO, the cost of the acquisition itself, transferring the asset to the tokenization platform, our initial marketing cost, as well as buying out certain investors that don't want tokens. Most of our investors have agreed, a couple want cash. Those that want cash will get it at a discount, so it'll benefit the company. The first entity of its type is called Chesterfield 1. Everything is very positive about this whole structure except for one thing. You can only issue $75 million per year in equity as a Reg A Tier 1, because it's Tier 2, I'm sorry. It's intended to be for small cap public companies. It's not intended to be for a large cap company. So what we intend to do is to get to 75 million of equity would represent close to 300 million in assets, maybe 250 million in assets. When we get to that point in 1 year and we need to spend more money, we're going to create Chesterfield 2, and then Chesterfield 3, and then Chesterfield 4. And we can piggyback off of those, and eventually we'll do a roll-up of all the entities under a master holding company or just a plain merger once we get to a certain scale where it will no longer be regulated by a Reg A Tier 2, we'll just become a normal public company. Our costs would go up somewhat for reporting, but it would be worth it because we'd have an asset base at that point well over $2 billion by the time we'd merge up all the entities. I run some very large funds over my career, so the size I can run a portfolio up to about 5 billion on my own before I need to hire more staff. We have some top-notch staff already on hand. The company's not paying for any infrastructure except for our CFO. Our CFO worked for Sam Zell for 25 years and is one of my best friends, and he's coming in, and he's run public companies and funds before. Then we have one of the top people is our CTO, who wrote a book on cryptocurrency, and is kind of the blue book on crypto. And he's an expert in tokenization. And he's the only guy I found in the last 8 years that knows as much about tokenization as I do. And that's rare when you meet a tech guy that gets it, as well as this guy does. Then we have another friend, Jeff Finn, who used to own NAI Global and runs a big PropTech company right now called RealNext, where I'm a shareholder. And he's our outside advisor, but he has 300,000 subscribers to his own network that we're going to plug them into T0. So that gives us more reach beyond 45,000 investors to over 300,000 more investors. So our plan is to help T0 grow their base of investors so that we create more liquidity. I got 54 seconds left. I think I've covered everything in the deck itself. We can have it shared to anyone that asks for it, and they can read it in more detail and then, enter more questions. I'm willing to start the questions early if that's okay.
Okay, thank you, Lawrence. Thank you for the pitch. Let's move to the questions part, question and feedback. Zakaria?
Yes. Hi, Lawrence. Thank you for the presentation. I've actually been looking forward to seeing somebody serious about this in the real estate industry, since it was either crypto bros trying to come at the real estate industry without experience in it, or pure real estate people trying to put the assets on the metaverse. So it's refreshing to see a serious proposition in this sense. I had a couple of questions with regards to the current operating costs of the company, because I assume that with you, the CFO and the CTO, etc., you already have put in some money in the company, or at least sweat equity. So that's why I'm surprised as how low the investment amount is to both build the infrastructure but also compensate the people. So I'm curious about the split. And also with regards to the first acquisition, the cost seems to be 20 million. And I'm curious how the banks are actually reacting to this, because usually as soon as you deviate from the usual structures, the banks are much more reluctant to provide financing.
Well, first off, I've been in the business 48 years. In the distress space, 90% of the people, institutional of any scale, know me well. From Blackstone, I've done deals with Blackstone, Cerberus, Fortress, Starwood, you name it, they've done business with me. I borrowed money from bridge lenders. I am a bridge lender myself. Colony Capital, myself in 2011, created the value add bridge loan as we know it today. At the time we did it, nobody knew what we were doing. About a year and a half later, now every single bank has that product. Okay, so we're innovators in front of the market. Okay, the benefit is we understand tokenization, we understand the public markets. I've done a couple public, with Cerberus, we did a takeover of a public entity. I've worked with a number of public entities and merged billion-dollar REITs together. So we understand the corporate, public, real estate, and the tokenization side. I haven't met anyone that has the full spectrum like we do. So, and the reputation, if you check us out, we have an incredible reputation. But none of the big guys, Starwood, none of these guys are going to do a tokenization. Apollo is trying to tokenize their assets right now, and they don't know how to explain it properly to their investors, and most of the investors have said no. Our other competition is a company called Red Swan, run by a friend of mine, Ed Nowicki, who wanted me to come on board with him. But when I interviewed him, he didn't know anything about tokenization. He didn't really understand it. What was worse, he really knew nothing about real estate. So I don't know the future of his company, but those are the only two competitors in the space right now. But if you do your reading, which I'm sure you already have, both Goldman and JP Morgan believe that by 2030, there'll be over $1 trillion worth of assets, not just real estate, all types of assets that are tokenized. I've been approached to tokenize music catalogs, which, because they have a recurring income stream like real estate, would make sense to do that platform too. We have a number of other alternative assets that people want us to tokenize, but I've told them I'm incredibly focused on the commercial real estate side. Until we show proof of concept there that it's acceptable, it doesn't make sense to go to other asset classes. But whoever comes in with us, we would treat them as a partner. And if we go into other asset classes, they would be our partner there as well. The best point is you can deploy as much money as you want with this. $1 million is just a start. We're talking the ability to deploy billions if you want to, or tens of millions or hundreds of millions, because we have access to billions of dollars worth of product. Right now, we're doing $500 million worth of multifamily workouts for third parties, where we buy or invest in those deals on a fire sale basis. So we have the deal flow to flow into our tokenization platforms, but our intent is to reduce the risk for the retail investor. So we plan to keep Chesterfield Faring buying these assets, fixing them up, increasing the value, and then putting them into the tokenization as an exit. We don't plan until we have enough critical mass to put fire sale assets direct into the tokenization, because that increases risk for the retail investors, and we don't want to do that initially.
Clear. I'm just wondering now that I hear you talk about it. So Chesterfield would acquire the assets in fire sale, fix them, and then you would have a clear exit, which would be the retail investors that are in the tokenization platform. So I would assume there would be some pricing discussions, etc., but that's probably not as relevant.
We'll get third-party appraisals on the retail value when we put it into the retail platform. But the investment opportunity we're offering you guys is the ground floor, not just on the tokenization platform, but the right to co-invest with us on every fire sale purchase we make. A lot of our acquisitions are done by buying the mortgage first at a discount, then going and working with the borrower and buying him out, and then taking over the property at a high fire sale. I'll give you a quick case study. We bought a loan on a piece of land, prime development land in New Jersey, 15 minutes from New York. We paid $10,550,000 for it. We paid full principal amount, which is unusual for us. We usually buy it at a discount, but this one had a $38 million appraisal, and it was going into default at 21%. I borrowed $10,550,000, my purchase price, at 13% from one of my friends that runs a fund. And we put in like 500 grand at closing, origination fees, and some prepaid interest. I'm paying the interest each month, but we're making $80,000 a month spread on $1 million investment. And we could contribute that loan. We could contribute that loan to the tokenization, but we think even though our risk is low because we're only owed now 17 million and the land's worth 38, we still wouldn't put that into the tokenization until we got the real estate itself back. And then when we get the real estate itself back, we then look at putting it in at a wholesale price into the tokenization. But it would give you the opportunity, if you wanted to buy into that land, if you invest in the tokenization platform, it would give you the ability to buy in at any stage you would want to buy in. Obviously, you make more money if you buy in early versus buying when we get it to a retail value.
So I have no doubts about the ability to source and execute on good acquisition at a below market price. The question I would have is more on the tokenization, because you can source deals, and in order to capitalize them, you need the retail investors to be there. And the retail investors, I still don't understand how that piece actually fits into T0, because even if you have a clear value proposition with a below market price and the track record to execute, it has been historically tricky to garner retail investors at a pace that is good enough to close on the deals. But this was historically without the tokenization platform. So that's why I'm wondering how the tokenization platform solves this problem.
We're looking strictly at the tokenization as an exit. We already have 100 high net worth investors that invest with us to acquire these assets. In addition to them, We have a lot of family home offices. So our 100 high net worth investors, we already have that we've cultivated over the last decade, put in between $100,000 and $250,000 checks individually. In the real estate business, that's the very hardest money to raise. So we have that covered. The next hardest money to raise is 2 to 5 million. And we have about 12 players that have co-invested with us before that'll write a $2 to $5 million check. When we get to 10 million, we have about 25 co-investors that'll come in if the check's 10 million of equity or greater. And when I get to 50 million, I actually have over 100 investors that will co-invest with us. And when I get over 100 million, I have about 7 or 8. Like I have Blackstone, I have Starwood. They all want to invest at least 100 million of equity. When you get to those size deals, I'm not going to do them in a tokenization. It defeats the purpose, because when I get to 100 million of equity, even I have to pay retail prices because I have so much competition for those assets. The stuff that's under the radar screen is 5 to 30 million, and those are the assets we're going to focus on. I was able to take $500,000 in 2012, and as of today, I grew that to $20 million of net worth. So, and of my own personal net worth, my investors have about 50 million invested with us, and they're going to exit at about a 32% annualized return with us. You know,
and just to make sure, I understand, all of these tickets below the 10 million that would make sense to tokenize, these investors would remain in cash and would not participate in the tokenization. It would be the retail investors afterwards that would buy at retail price or below retail price.
Ironically, because of the type of assets we buy, what our trick to success is, we invest in 100% Class A location properties with a poor sponsor. And we expect that half the time the sponsor will fail, and we will step into their shoes and get the property at a fire sale. The one we're contributing, we had invested 500 of preferred equity, and the guy failed. We took it over. We bought back the first mortgage at a discount because it was a fire sale. And then we went and finished completion of the construction ourselves. I've developed over 100 properties over my career, so I can easily take over any broken deal and finish it. So we finished it, now we're leasing it. We're getting Class A tenants. It's a Class A location. Uptown Dallas is called Gay Town. It's like a gay neighborhood. And if you follow real estate in any of the major cities, San Francisco, New York, Chicago, Dallas, the highest end neighborhoods are the gay neighborhoods. And young women feel more comfortable living in those neighborhoods. So they gain the most traction and get the highest rents. We're getting 125% above median rent in that location. So it's a really great asset. And they're all 2,000 square feet, a little smaller than 2,000 square feet. They have 2-car garages, and they have 3 bedrooms, 3.5 baths, and they have high ceilings, and they have an open loft ceiling on the 2nd floor. That's the living room, dining room, kitchen. There's a staging picture in the book that shows what it looks like. And we have a full deck for, you know, to show you all the history and the story and the pictures for the Dallas property. But Dallas is still one of the hottest markets in the US.
Got it.
So,
okay. So I think I've covered most of my questions. The only one would have been remaining is with the 1 million. I see that there's a 2x right after the investment, but then where would that be? Would the investor own shares in Red Blocks or in Chesterfield assets per se, or at which stage
you're
is the
owning it
investor?
you're owning it at Chesterfield 1. Those 2 million in tokens for the $1 million investment is the moment we do. It's called an STO or an ICO, and that's you know that's the term they give for a secured token offering, or you know, an ICO. The moment we do the ICO, you get issued $2 million in tokens. Now there are Series A shares that reflect the tokens, so we still have shares. So at any time we can detokenize and just issue you shares instead. And the only reason we probably do that is if we're merging with another public entity. that we've grown to such a size, or that we're doing a reverse merger to buy, let's say, a residential REIT that's existing, a multi-billion-dollar REIT. So I've done a lot of those types of LBOs, MBOs, hostile takeovers, you name it, I've done it. So if an opportunity to grow our asset class overnight, we can do it. I would go ahead and do that, and then do another tokenization and keep growing that next entity. So the one thing I'm good at is creating wealth.
I'm sorry, Lawrence. There is one more advisor who would like to ask shortly a question, or we're already running a bit over time, so we have to keep it short.
Please.
So Daniele, did you join us? Daniele.
Yeah.
Hi, Daniele. Welcome.
Hi, and apologies for being so late, but the time is here in Malaysia. So I lost it. Here I am. With apologies.
Maybe you can introduce yourself first, and then you can say a short feedback about your speech.
Yeah, thank you so much. Thanks for having me, and again, apologies for being late. I'm Daniele Gambero, originally from Italy, living in Malaysia since 1998. 40 years of experience in real estate, from North America to Central America and South America between the 80s and early 90s. Then a few years in Europe, and then here, Malaysia and Southeast Asia. I've been all my life looking at property as something that get values and should be developed following demand, following data, following precise information on location, quantity, and so on. And out of it, I developed my very first startup in 2016 called ProperTech, database modeling to generate quite precise prediction on property demand out of a set of data quite uncommon for property, meaning not looking directly into property data, but looking into demographic information, economic growth information, job creation, wages, income, spending habit, purchasing power of families, and so on. And all these congregated and analyzed through my model gives this type of prediction. Besides this, since 2017, I've been president of one of the founder of the Malaysian PropTech Association, and 2019 till today I've been the president of the PropTech Association of Malaysia, where we have about 130, 140 members. Tonight we just completed one of our events, one of our networking event with our members. Very much mature in terms of association, very much active. We look at global expansion, not I believe, we all believe, but I've been kind of driving this belief in the association that as a startup, you shouldn't look at your country only. You start from your country, but then you open up your eyes and you move outside the place where you normally live and work. And this is what I've been doing personally with my first startup, ProperTech, and all the other that I've been having, plus driving the association and most of our 130 members to move beyond the location of Malaysia. Besides this, I'm investor. I'm investor, I'm a mentor, I'm a judge, very passionate about helping others in growing in a sustainable manner, others in terms of startup. Back to you.
Great, thank you, Daniele. Did you have the chance to prepare or to see the deck of the first presenter of Lawrence?
Okay, I've been receiving it quite late, unfortunately. As I said, I still didn't get a chance to go through, but I will say I'll be sitting here now, listening to what is happening,
Okay,
and in the meantime having a look at it.
Maybe you can like participate in the second. You can listen to the second presenter and then feedback, and then you and Lawrence can maybe talk another time or chat about this deck. So we need
Definitely.
we have a timing, and yeah, like we should just
Please.
move now. Okay, great.
And apologies again for being late. Hi, Lawrence.
Okay, so let's move to the second presenter, which is PropertyLens.
Lawrence, you were on mute, sorry.
Hello.
I just wanted to say hello to you, Daniela, too. Thank you. Love to talk to you offline too, because we have some deals in Latin America that people are asking us to give them guidance, and you could probably be helpful there. Thank you.
Okay. Right. So the floor is now for Bob and the company PropertyLens. So Bob, whenever you're ready, you can share your screen and can start the pitch.
Thank you. Let's see. Let's share the slideshow. I will describe this very simply. We're a Carfax for houses in the US. Buying a home in the US is very stressful. The last time people try to buy homes, generally there's price competition or there's surprise expenses that end up in a home. And this is how most people end up after purchasing a home in the US. 82% of home buyers express regrets about their recent property purchases. 42% of home buyers wish they had done more research before buying their home. We fixed that. We're like a Carfax for home, except better. We not only give you the history, we give you insight as to what to ask before you make an offer on a property or what to do once you've bought a property. We take away the pain of the unknown. There's 5 key reasons why PropertyLens is a winner. Number 1, this work is really hard and it takes a great team, someone who knows how to make it happen. My co-founder and I, John Sigmund, had built a company before called Hazard Hub, which did geospatial risk assessment, sold that to Guidewire 3 years ago for a nice 8-figure exit where everybody made money, which is nice. We know how to manipulate data. We know how to gather data. We know how to turn it into products, and we know how to turn it into both B2B and B2C products. Julie, our co-founder, was also the first person we had at Hazard Hub, and John is our CFO who keeps our books in nice order. There's an incredible amount of data that's out there, most of which isn't available to consumers or our competitors. Because of our relationship in the past, we've been able to develop sharing relationships with other providers who don't have an outlet to the consumer. For example, satellite imagery, we can integrate. What we try to do is take all this data and present it in a way that's consumable and easily consumable for the consumers. Lots of pictures, a few words to help them guide where they want to go. Things like, where are the registered sex offenders within a quarter mile of your house? Or what's the risk exposure of your roof? There's a lot of places you can get this. And people say, well, how are you different from the Zillows of the world? And that's where you get in here. You can get some data from those companies, but we give you a copious amount of information for what is, we think, a very small price tag. We give the buyer control. We take all the data, we run it through a series of rules and a series of AI tools to customize key questions they should ask before they buy a house. Usually in the States, when you buy a house, you get a disclosure report after you've made the offer. This gives insight before they make the offer. So we give you very simple questions that you should ask before you make that offer. We've seen, for example, this roof is in excellent condition. It's 24 years old. It's going to need replacing soon. A lot of people are having trouble getting insurance because of older roofs in the US because insurance companies have tightened their rules. We provide this data up front so that they know going in that they may have an issue with an older roof. It's a big market. 4.5 million home sales in 2024, one of the worst years in the last 30. Buyers evaluate 10 homes before they purchase. At $99 a report, that's a market opportunity of about $4.5 billion. But we know that cracking the consumer market is hard. It's very difficult to build a B2C brand. Because of our expertise in data, we've also built a B2B data pipeline that will keep us afloat while we figure out the consumer issue. Currently, we have about $750,000 in our pipeline. We think that we'll bring most of that in over the next couple of months. But that B2B data, things like what's the roof condition, what's the roof age, what's the roof sensitivity to risk, what are the flood zones, all of those things we can provide as building blocks, but we also put it into a report for the consumer. We're looking to raise $4 million. We have raised $2.1 million already at a $10 million valuation as a pre-seed. This started out as a dream. We've realized the first version of the dream, and now we're looking to raise the second version of the dream. We've put in $550,000 of our own money. We want to use this money for sales and marketing, for product development, for operations, and for cracking the consumer market. Here's early reaction. We had one customer who's like, no one told me my house was a meth house, except for PropertyLens. We use PropertyLens in all of our inspection reports. It's a must. It's like a Carfax for houses. The enthusiasm is high. So we're looking for the right investor, someone who believes in the vision that we have to help buyers before they end up buying something that costs them thousands of dollars in unexpected expenses. So join us in sticking up for home buyers. I'm Bob. Thank you.
Thank you so much, Bob. Congratulations. Great pitch. All right, let's move to the Q&A. Daniele, would you like to start?
He's on mute.
Daniele, you're on mute, maybe?
Yeah. Very interesting solution, Bob. No particular question at the moment. Let Lawrence and others to ask first.
Bob, I might have something more valuable than money for you.
What's that?
That is a lot of relationships and networking. On LinkedIn alone, I have 23,000 followers. So here's a couple opportunities. One, I own a company in Nevada that manages 240 homeowner associations, which reflect 45,000 houses. We send them a bill every month for their HOA fees. In that, we could promote your business and tell them that this is an opportunity and then they could link it directly to your website and take advantage of your services. So that's one opportunity. The second one is
we'd be happy to do so. The second one.
Okay. There's another opportunity too, is we have a lot of relationships with banks that do a lot of RMBS, which is real estate mortgage-backed securities. And it may be a product they want, especially when they're taking back properties. So they know what to expect. Okay, so they're REO departments. We know them well. Third is there's a company I'm a shareholder of called RealNext. One of my best friends runs it. He's a CEO. And the founders of it, the name of the holding company is Pavonis, which is the mythological creature that ate Argus, which was his former company, which is the standard that people use for commercial real estate to analyze real estate. Argus was sold for $130 million to a Canadian fund. And now they started this company, and RealNext has 300,000 real estate brokers that are subscribers. So that would increase your network as well for the residential departments, because a lot of them have residential departments. So we could add some of those contacts to you that might help you network and grow the actual base core business for you. RealNext may even do some type of joint venture with you to help promote you beyond just a subscriber base, because they're constantly building their network, and they could integrate and embed your link to your website with theirs, so that homeowners looking at properties on their sites can go ahead and directly me to you. So if you could send me a source and use of funds, how you're going to use the 2 million, I'd be, of interest of taking a look and seeing if it makes sense for us.
Sure.
Because we like investing in PropTech companies. We're invested in a number of them.
Let's drop. I don't have your email address, but if you
I just messaged it to everybody.
Oh, there it is. There it is. I see it.
Yeah.
Be happy to. I'd be happy to.
Okay. I don't have any real questions. It's pretty self-evident what you do, and I think it's a very smart move. The only other thing I would add, if I were you, is just strictly on an advisory basis, is when I was a broker 40 years ago selling residential, I started there in the mid-70s. I used to buy a home warranty for every single one of my buyers. So I didn't, it was my insurance policy against lawsuits if I missed something when we did a walkthrough. You might want to link your company with a home warranty company, a good one, that where they can buy that as well, as they exit, your site and find out everything wrong with the house. And then if they buy the home warranty, they cover their rear ends, so they know it'll be taken care of, whatever problems they found, but they can still use that as a negotiation to get a better price from the seller.
That's part of our monetization plan post sale. Once we sell the report, then we have other services that we can offer to. So we have those partnerships in place. We haven't actively, we're still really cranking down the front end right now, but that's all back in monetization that we've thought about quite a bit. So we're happy to connect.
Yeah, good minds think alike.
Yeah.
Thank you, Lauren. Okay.
So someone had asked what the comparables are in the market.
Yeah.
And that's a really great question because there aren't a lot. This is really hard to do, to both crack the consumer and manage the data. And people seem to do one or the other. The closest we've seen is a company called Real Reports. We think, of course, our data and advice is better, but they're focused more on the broker community, whereas we're focused on both the broker and the consumer community. So it's the good news, it's greenfield. The bad news, it's a greenfield. There's no path. So we have to figure out what that path is.
Okay. And now let's hear Zakaria's feedback and questions.
Yeah. Thanks, Bob. As Lawrence pointed out, self-evident, and you wonder why nobody has done it yet. But as you said, it's difficult to piece the data piece and the consumer piece, which gets me to the question where you said you have already invested 2.1 million, of which 500K of the founders, and you're raising 4 million of seed round. So I'm wondering what the progress that was made with the 2 million up to now. You have 750,000 in the pipeline from B2B. So the question would be, is there any signed revenue or mostly LOIs and conversations ongoing with so beyond the tech that you built with the team so far with 2 million? The second question is, what are you noticing in the pipeline? What type of B2B? Is it like banks, like Lawrence mentioned, or like are you finding out unexpected clients somewhere?
So the status of the pipeline is there's contracts out for all of that pipeline. One contract is done. 3 more are in, except for one is just an oral agreement where we have to get it papered, but the other 2 are both going through red lines right now. What we've seen is that the B2B business comes in 2 flavors. The first is that where someone is pulling off a piece of our data. We have a product called Roof Lens that gives you the age, the condition, the type, the replacement cost, and the risk exposure of a roof. And that is going into primarily our inspector channel. So an inspector will pull this data in and then know whether they need to climb up on a roof to go examine it more fully. The second is bulk purchases to real estate brokers, where we have a broker in Wisconsin and someone who we know said, I'm going to buy 4,000 of these and put them on all of my listings. So I know I can get a higher price for my houses because we've done the diligence to say, here you go, here's the risks of this property. And then the third, which is the surprise, is the insurance industry. where a lot of insurance companies have become very much of an arm's length relationship away from their customers. They don't really tell them what the risks are of their property or what they know about the property. And we're starting to see that change just a little bit, where when their policy renews, they pull the PropertyLens report, they send that to the consumer, and then discuss with them, okay, here's what's coming on at your house. This is going to impact your premium. You know, what can you do proactively to help keep your premiums in line in a way that, you know, really hasn't been done before? So I'd say that's the biggest surprise so far. On the consumer side, what I would say is the interest is enormous. You know, the way that we package it is still the last part of the puzzle that we need to figure out. You know, we've spent a lot of money testing dozens and dozens and dozens of different creatives using Meta, using Google. And what we've seen is that the interest is high, but the way that we have to package the product is something that we're going to change, actually, where we're going to make it free to enter. So you can see something. It's a freemium model. We're going to switch to a freemium model. So we'll give away some level of information because we own a lot of our own data, and we've built a lot of our own data. We'll give that part for free. And then when they want to know the specifics about the roof condition or the permits or the flood risk, then they order the report. That also opens up to a subscription model that we're still figuring out what the finals look like, but buying a house is a long cycle. So you want to make sure you're with people all the way, just not right when they get to the doorstep, get to the signature. So I think those are both the pros and the cons. You know, the consumer side's been challenging. The B2B side has been far less challenging, I think, mostly because of our personal relationships from selling this sort of stuff before.
Got it.
Bob,
No.
are you doing commercial properties as well, or plan to?
We don't do it yet. The system will accept a commercial property, but a lot of the AI and a lot of the rules are geared towards residential properties. You know, so we can tell you, you know, part of the problem with commercial properties is if you look at the building permits, there might be hundreds of building permits for a specific property. And we pull them all in, but it does sort of make for a very voluminous report. So we have thought about that, and the system will take it. It does not give you as good an information as it does on a residential facility.
I thought this might be really valuable for appraisers doing commercial properties, but it could be valuable even for residential appraisers.
Yep.
Because
Yep.
how they value the property is by its conditions. So you can
Yep.
help give all those variables. So
Yeah, you know, we examined a property yesterday on the coast of New Hampshire, and the big thing is it's 750 feet from the ocean, and most insurance companies won't write it because you got to go to the specialty market for that because it's too close to the ocean. And that's a surprise that you find out after you've made your earnest money deposit. It's like, holy cow, now this insurance is twice as expensive as I've been led to believe. We can alert people to things like that beforehand, whether it's an appraisal or whether it's an inspection or whether it's an underwriting decision. We can provide the data to help fuel a lot of those.
Okay.
Yeah.
Do you have some more questions? Or
your solution is strictly based in US. Is not something that you are thinking in scaling up outside US. Am I right?
Correct. Currently, I would love to do this globally, but let's get one country at a time. Yeah, keep focused, build the success here, and then see where the market supports. You know, the good thing about the US is there's a lot of good data that you can tie together creatively. Other countries may or may not have that same data. That's something that we would look to, probably more of a Series B type of an event.
I agree on that. Thank you.
Yeah, no further questions for me except Bob. I think you have all the ingredients for raising the seed round from one of the PropTech funds, be it Pi Labs or Fifth Wall, etc. It's like exited founder, clear value proposition. The team is in place, the product is in place, and I think it's just a matter of finding a VC that actually believes in the vision and So that's, yeah, it seems like if you need any introductions, please feel free to reach out to me. I'm happy to make them.
Thank you very much. I would love that. We bootstrapped the last company, so raising money is something that's relatively new. And so my connections in that piece of the world are more in SureTech than they are on PropTech. So if you have any people that you think I should talk to, I would welcome an introduction.
Absolutely.
All right. And I'm sorry for running over time. My apologies.
That's okay. Thank you so much, everyone. Yes, great. We have 2 more companies tonight. Now we will move to the third one. It's called BreezeMove and it's presented by Phil. So Phil, whenever you're ready, yeah, you can share the screen and start.
Make sure everybody can see that screen.
Yes, you can see the screen.
Thank you. Thank you. Hi, my name is Phil Melia, founder and CEO of BreezeMove. Following my previous business, buying and selling hundreds of properties in the UK, we experienced a painful process. We had an idea: could we centralize the proposition and could we drive down completion times and also fall through rates?
Maybe sorry, maybe make the screen full screen.
There we go.
Yeah,
there we go.
Great.
There's a huge problem in the UK between offer and completion, which no one has yet to solve. BreezeMove has an AI-driven PropTech B2B SaaS vertical automation application, which is currently reducing completion time significantly and reducing fall-through rates significantly. So what causes this stress? Well, in the UK, the property transaction actually takes 22 weeks to complete after the offer stage. This has actually gone backwards. Just 10 years ago, it was 10 weeks on average. 30% of those transactions fall through after the offer stage, which costs consumers over £909 million every single year in wasted fees. It also costs estate agents over £600 million every single year in wasted fees. So how do we automate this situation? So I have a fully transparent, accountable and inclusive platform, which is AI-driven, holding everybody accountable right the way through from offer to completion. So what's the market size? Well, in the UK, there's currently 1.2 million transactions every single year. Reducing the fall-through rate with our automated application equates to an £854 million saving for consumers every single year. Our total addressable market is over £7 billion, and we've established other markets across Europe, Australia, Singapore, and South Africa. There are 17,000 estate agents currently in the UK. With our value add, reducing completion times by 50% and reducing overheads by 80%, we have a potential £2.9 billion annual value add to estate agents. So what are we currently achieving? Well, the average completion time on the BreezeMove platform is just 13 weeks, which is nearly half the national average. We have a fall-through rate of just 4%, which is a 90% reduction to national average. We are reducing estate agents' overheads by 80%, and we have response rates from solicitors in just 75 minutes. So where does BreezeMove actually fit in? Well, agents list a property on a portal such as Rightmove, Zoopla on the market, and we fit in between the offer and completion stage, fully automating the conveyancing process through AI-driven communication. So where does the AI come in? Well, currently our internal team handle over 100 emails and 16 phone calls on every single completion, which averages 11 hours of manual labor. With the AI, we'll reduce this by 9 hours on each single transaction. On our current go-to-market strategy, we've onboarded several business development managers from previous experience of property portals such as Rightmove and On the Market, bringing across their estate agent contacts and harnessing current relationships with their current solicitors. How do we commercialize? We are a completely free solution for estate agents and their clients. We currently charge each solicitor a completion fee of £300 each, and we have future economics such as searches, surveys, mortgages, post-moving services, and utility switching services to further enhance the unit economics of each case. And where are we now? Well, last year we transacted over £100 million in property. We have 120 estate agents on board, over 30 solicitors, achieving 600% year-on-year growth with an average of 50k sales revenue per month. We closed our pre-seed round in January 2023, raising just £280,000. Here's our forecast, which shows our incremental growth, January up to December this year. By January 32, we want to have achieved revenue of 395 million. This will enable us to control both sides of the market, both the estate agent sector and the conveyancing sector. And what is our long-term strategy? We want to fill the gap between offer completion through generative AI, which no one has done before. With just 5% market traction, we will equate to £395 million revenue by 2031. And why will it be us who delivers? Myself, co-founder and previous exited founder. And we also have the ex-commercial director of RightMove, Jason Bushby. Jason took RightMove from startup to IPO. We also have Russell Quirk, the ex-eMove CEO, now controlling a lot of the industry press. And where are we going with Seed? We have white label opportunities through driving our MVP of our generative AI model, integrating further partnerships to enhance the revenue models. We're raising £750,000 with £250,000 already committed through follow-on VC investment. And we're looking for value-add investors to join this round, meet our growth ambitions of delivering BreezeMove into unicorn status. Thank you for your time. I invite any questions.
Thank you, Phil. Great presentation. Okay, let's begin with the feedback from Zakaria.
I'll hold on with the feedback until after the others. So please, Daniele
Okay.
or
Yes. Okay. Daniele?
Yeah, a bit more information on your current market penetration. You mentioned 60 agents are using your solution. Am I right?
120 estate agents.
Oh, 120. All right. And out of 120, you have been able to generate £80,000 revenue.
So our current revenue is £50,000 monthly. That's sales revenue. So we have two actual revenues. So we have sales revenue, which is the piece going into the system. And we have realized revenues when they complete. So there's a lag between sales and realized. So in March, our realized revenue was 30K and our sales revenue is 80K.
And I saw a quite sharp growth in your sales, where that is coming from.
Yeah, so
In
we
your
changed our
prediction.
model. Yeah, so we changed our model last year. We used to go out to a specific region within the UK and show estate agents our free platform and say we've got a great selection of solicitors, reduce their overheads, reduce their completion times, and reduce their fall-through rates. But we actually now go out to that region and harness the current relationships which estate agents have locally with their solicitors, which has helped us scale massively.
So you're confident that you can achieve that.
Yeah, so for our perspective as well, there's no one that fills this gap between offer and completion. So the likes of the property portals, all they do is market a property, and estate agents pay a huge premium for that. So we want to sit in the middle of that gap. Whereas if a vendor instructs a estate agent to value their property, if they're not using BreezeMove, then they won't list with that estate agent. And similarly, if a vendor wants to use a specific solicitor and they're not on the BreezeMove platform, then they will not get that case, and ultimately they will die as a business. So we will end up controlling both sides of that sector and sitting perfectly in the middle, plus the other opportunities with data monetization. So searches and surveys coming back. So for instance, if there's an opportunity for a new roof, we can sell the data for 3 years down the line for a roofing company, boilers, etc., etc. So there's huge opportunities to increase our commercialization.
The AI model that you are using is specifically developed by your team or open generative AI?
It is. So it's open engineered and it's a agentic AI. So we've actually just launched the MVP of it this month. So it's agentic AI covering a lot of the emails right the way through to completion, but also poses the opportunity for us to white label that to corporate clients as well.
All right. And how you address the risk on personal data?
On what, sorry?
Personal data protection.
Personal data. So we have all GDPR codes in place, and obviously when we onboard an estate agent and a consumer, they take a terms and conditions, which means that we can share their data across the channels.
No competition. You didn't mention anyone.
So there's only one which is the closest competition to us, which is a company called Cojute. And what they're trying to do is build a centralized position on blockchain, which is a data sharing aspect. So they have mortgages, banks, estate agents, and solicitors on their platform. They've raised about £21 million so far, and haven't achieved much traction. But what they're trying to do is create a central position to data share. We learn to pre-seed, no matter how good the data points are, if you haven't got the accountability driving the sale through, and it ultimately just shows how slow the slowest moving part is. So that's why we had to keep on onboarding our internal team to drive that through with the 100-odd emails on every single transaction. And then that's where we came up and said, hang on a minute, this isn't scalable. We need to revert this back and make sure we've got the AI doing a lot of this heavy lifting throughout the process.
Okay. Yep. No more questions from my side. Thank you.
Can I ask a few questions, or
Yeah,
is that
of
okay?
course.
Yeah, that's
Okay.
fine.
Okay. So what exact tasks does the AI eliminate or accelerate from the time the offer is put in to the time you close?
So communication is the main thing, Lawrence. So the AI is picking conversations through emails and process automation. So the platform itself has checkpoints right the way through from offer to completion. They are obviously automated and integrated throughout the email systems. But the AI is a conversational agentic AI. So it pulls up the responses from solicitors and updates all parties. So it means the solicitors can actually get on with the legal work and has field calls and emails from buyers, sellers, mortgage brokers, and estate agents.
So a part of the task, I would imagine, is that the AI would automate the infill data into standardized forms. Is that one of the
Yes.
functions? Bill?
It's one of the functions, but the main aspect is the conversational AI. So it's pulling data from responses. So we have a lot of the automation in place already. So we go out every single morning to a section of solicitors and ask for updates on certain properties. When they respond, we obviously track that internally, and we have to then update all individual parties to say this has happened or this hasn't happened, and then set tasks within CRM systems to continually chase that. The AI will be automating that whole process.
So it appears to me that the greatest value add is to the solicitors, not to the agents themselves, except they accelerate and get paid faster. But for the solicitors, it sounds like it speeds it up for them more than anyone else.
It speeds up for the solicitors, but the biggest value add I would say is for the estate agents, because ultimately they get paid obviously faster, like you correctly said, but we also reduce their fall through rates. So the average fall through rate in the UK is 30%, which means that they've never been paid on all that work they've done. Our fall through rate is just 4%. So we're reducing the amount of fall throughs they have. Obviously reducing the overheads because they haven't had to employ as many staff to do the chasing to buyers, sellers, solicitors for updates because they use our central position. And we also give them additional revenue stream as well. So it's hugely proposed for the estate agent to benefit the most.
So you're driving more to getting the estate agents and driving to acquire more solicitors.
Yeah, so what we do when we bring an estate agent on, we usually say to them, who's the best conveyancers you use? And then they're our lead generation for those specific solicitors. So we actually leverage the estate agents to get the solicitors on board. But we've actually got a waiting list of solicitors to join the platform. And from a solicitor's perspective, they set their own pricing structure. We don't tell them what to charge. The platform ultimately generates quotations based on the freehold, leasehold, purchase pricing, incrementals all the way up to 2 million. And they only pay us a fee on successful completion. So it de-risks it for them. They also get national case exposure. So any additional cases they get through BreezeMove, they would not have ordinarily got anyway.
Okay. So what does an investor get for this next up round if they invest?
Part of the, say that again, sorry.
It wasn't clear in your presentation what the investor gets in your next up round.
Yeah, so obviously we're raising equity in this round. So we did a pre-seed round which closed in January 23 at a 1.85 million pre-money valuation. And with this round, we're raising £750,000 at a 5 million pre-money valuation.
All right, so that equates to getting around 16% of the company. Okay.
What is your pricing model, Phil? That's something I'm.
Sorry, was that Zakaria?
What is your pricing model?
Pricing model. So we charge each solicitor £300 on successful completion. So usually people are buying and selling, so that one client is worth £600, and that's just one side of a transaction. And then obviously we get the other side. So if it's a buyer and seller, it's £600. If they've then got an ongoing purchase, then that's another £300. So one potential transaction would be £1,200 each.
And I also see that you say that 1 in 3 properties fail after the offer being accepted, so you reduce it from 30% to 10%. What are
4%.
the 4%? Okay, and what are the key, let's say, reasons that it's 30% prior to using your platform? Because that's basically
Yes,
your added value.
that's it. Yeah, so really good question. So time kills deals. The longer the transaction goes on, the higher the rate of fall through. So obviously the average transaction time in the UK is now 22 weeks. Ours is 13 weeks. So because we've got that constant communication and that glue the whole property transaction together between the estate agents, the buyers, the sellers, and two-party solicitors, we've got that top level of communication and driving the efficiencies through. Everyone feels like they've got a vested interest. Externally, if someone didn't use BreezeMove, the estate agent would do all their work, get the property under offer, and then just leave the buyer and the seller to find a solicitor and rely on that communication to be good with the solicitor. But obviously, there's no vested interest there, so we harness those relationships and centralize the position to make sure everyone's fully accountable and everyone can see live 24/7 where the process is up to. And more importantly, who's responsible for that next stage of the process.
Got it. I think there's also an assumption here baked in, which is that the solicitors wouldn't mind having an AI handle something as important as their purchase of property, which is the biggest purchase in their life for most people. So if I think of the Dutch market where I was based for a long time, there aren't that many properties. So usually the overbidding is up between 30% to 70% of the listing price. So there's too much demand and too little offer. And that's where you want to be doing real estate as an agent. So I would understand that in the Netherlands or in Amsterdam, an agent would just be swarmed with demands that actually having an AI sort out things and figure out most of the grunt work would be much welcome. But on the other side of the solicitor, I am not convinced that people would actually appreciate interacting with an AI initially up to a certain point where it's critical to have the agent be involved. And I think a lot of people can relate to that, where if you have ordered something from Amazon or whatever, and you have to talk to customer support, if you get like an AI chat, it's usually frustrating and you want to go straight to the agent. So I'm worried that agents might consider that there would be less solicitors, or the fall through would actually be higher than the 4% or 30%. Because a lot of people would just be
Yes.
like, okay, this is AI.
So we're not actually the solicitors, so we're the middle ground between the solicitors and the estate agents in that communication. So where we come in is that the AI will be doing the emails from our own team, and then there'll be a summarization email as well. So if that person rings in and wants an update, the summarization rings to our team and says, this is what you've talked about in the past 3 weeks. So the team constantly know what the communication has been and what that looks like. So it's not, the consumer never thinks they're speaking to an agent. It's always from one of our team members. And we can personalize that on an individual branch basis for each estate agent across the UK, because their team will talk to their clients differently. So we collate all that data, implement it on a branch level. So their team, the language going out from the emails is agentic AI, but the consumer never knows that it's agentic AI behind that. And then there's a summarization tool, which basically says, this is what we've said. And then when they come through to the real person, the person actually knows the data which is being transcribed to the consumer.
Got it. Yeah.
Okay, thank you, Zakaria. Thank you everyone for the feedback. And now we will listen to the last presenter of the evening, which is vertical parking, VePa, with Simon. So hi, Simon.
Hey guys, nice to meet you. I hope you
Nice
can
to meet
see the
you.
screen. You can see the screen, just a little
Yes, we can
sign
see
or
it. Yeah, we can see the screen.
Perfect. All right. So well then, nice to meet you all today. My name is Simon. I'm co-founder of VePa Vertical Parking, and we are currently on a mission on building a impact parking and charging operator in urban areas. We are a Munich-based, so a German-based company. And so why do we actually do it? And that's because most of the time we see situations like this in urban areas or in cities, and we want to transform these places into situations like that. And what we've been doing in the past was really to develop these rotary parking systems that you can see here on the picture. And just to give you a real world example, so we have a project in Berlin up that is coming within the next months. And what you see here is a very inefficient use of land. quite a lot of sealed surface and inefficient use, as I already told you. And what we are going to do is we are going to transform it in an area that is going to look like that. So we kind of create up to 420 square meters of more livable, more sustainable urban area. And we can also increase the number of parking and, more importantly, also of charging capacities within these systems. So what our mission is we want to transform urban spaces with our space-saving towers that we've developed. And the product as such, or no, just I want to jump into why is it actually important. So I just have some numbers from the German market, but I think it's quite the same in the US and other countries. In Germany, we have 10% of urban space in cities that is covered by cars, and that's a big problem. And a lot of cities in Germany think about banning cars from the city center because it's just too many of them. And what we also see, there are quite big amount of studies that say that 86% of EV car drivers, they struggle to find sufficient charging infrastructure in cities and urban areas. And that's a big problem, because if you look at the impact that it could have, then we should try to bring more people from combustion engines to EVs. And just we also found studies here that say that actually 69% less CO2 is emitted with the electric engine drivers compared to combustion engine drivers. So we want to be part of that, and we want to help them to find sustainable solutions to park and charge their car in dense urban areas. So yeah, how do we do that? That's basically the picture of our first prototype that we've built in 2023 in close to Munich. It was actually a paid pilot, and of course a big milestone for us. And the technology is quite simple. So I know that there are some rotary parking systems in the US, and our mission was really to bring this technology to the next level. So to enhance the technology and also to integrate charging technology for EVs. We're also very proud that we were able to file a patent last year to really bring the electricity on all the platforms in the system. But basically, just a couple of facts. We only need 49 square meters of space requirements on the floor. So this is actually a little bit more than 2 conventional parking spots on the ground. And within one of these systems, we can store, park, charge up to 12 cars. The great thing is that's a very flexible structure, which means we can build one of these systems only within a couple of weeks, and we can also dismantle it within a couple of weeks if there's no future need. So yeah, what we are going to do in the future with this product is basically we are going to enhance the charging capacity from now slow charging to slow fast charging. So 15 kilowatts is going to be the next evolution stage. We're going to reduce the cost of the system, and we are also integrate some technologies around bidirectional charging, vehicle to grid technologies. That's something very big that everybody's talking about, at least in the European Union. Right now, the cars are not really on that level, but we expect to see an increase of bidirectional cars within the next 5 to 10 years. So it's very important to get to great locations right now. The picture that you see here is basically our third project that we are going to close within this year, or which we've already closed it, but we are going to build it. It's in the heart of Berlin. And we are also building one of these systems right now in the heart of Munich. So in 2 or 3, it's actually 3 projects that we've closed or already established, and we start to scale across the German and the European countries within the next years. How do we actually make money with that? So we kind of evolved from a project-based business to now like an operator with an asset-light expansion strategy that I'm going to elaborate on a little bit, with recurring revenues. Because what we did in the past, we really went to real estate developers, real estate companies, and we sold the product to them, and they were looking for a solution or an alternative to an underground garage. And we sold it to them. We made a margin on the sale, but it was, as you can imagine, just a one-time revenue project, which was great because we were able to validate the technology to get a proof of concept and get the first project up and running. But now what we do is really to shift on becoming an operator of these systems and to operate these systems on our own. So that's what we do basically right now. We are now looking for locations across Germany. And I'm going to show you the pipeline later on, but we have quite a good pipeline of great locations, and we are going to build and operate these systems on our own. And we are going to make money from 3 revenue streams. It's basically parking, charging, and advertisement on the facade. And if you look at the numbers in Berlin, it's around 150 to 200,000 euros per year per unit, annual recurring revenues. And given the kind of low operating expenses, we have high profitability on the unit economic basis on these systems. And of course, in the future, we are going to go into different services and different technologies like vehicle to grid that I've already told you, but now the focus is really on this operator model. And why is it asset light? Well, we don't have these systems on our own balance sheet, so we work together for the next 5 projects with family offices and asset holders from the German real estate market, and for them it's a very interesting investment opportunity, and they fund it through a full equity club deal. So the next stage would be we are currently issuing an infrastructure fund with one of our shareholders, and then would be the goal to get the next 20 or the next 100 of these systems up and running across Europe, and we are going to finance them through this dedicated fund. And it's always kind of like sell and lease back situation, so we don't have them in our balance sheet. We are the operating company in between, and we built the tech. So that's what we've done and what we did in the past. So yeah, I don't want to go too much into detail with the market, but we see, or we expect, a double-digit growth of the operator business model market in Europe. We start in Germany, we're going to scale across Europe, and then let's see where we will go after that. But what we've done in the past is we've established strong relationships with the key decision makers of cities and real estate companies in Germany. That's the first market where we start. And then we were also able to create a nice pipeline. So just some metrics on the pipeline. So we have a current sales pipeline when it comes to the project-based model. So say we want to sell the product to real estate companies, we have a current pipeline of around 19 million in potential sales in the pipeline that we're going to convert within this year and next year. And then we also have like a revenue pipeline for the operator business model of around 43 million annual recurring revenues in a pipeline that is also going to be converted this year and the years later on. And as you can see on the revenue growth curve, so we were kind of flat in the beginning, of course, and now we expect exponential growth in the revenues because of the recurring revenues at the end of 2025 and further. Just a team, so we have a very actually small but very efficient team. There's me and I have a co-founder, David. We have a very strong CTO who is highly experienced in all the tech and industry stuff. We are supported by 2 full-time equivalents that help us in the areas of finance and sales. But what's most important is we were able to really optimize and digitize most of the core processes of the company, so we can operate very capital efficient and with low overheads. And so yeah, that's actually something that we are very proud of, to have big complex projects but with a very small and effective team. And last but not least, that's something that's important to us, is that we can really make a difference when it comes also to the reduction of greenhouse gas emissions. And our goal is to have 100 of these units up and running in the next 5 years. And this would total up to 213,000 tons of CO2 emissions that we could reduce when we have these systems up and running, basically, or mostly through the fact that we can shift or help people shifting from combustion engines to EVs. So last but not least, we are currently in a fundraising situation. So we are open to or interested in investors who would like to participate in a short-term convertible note or convertible loan agreement. So this opportunity is open until April. We try to close an equity funding round in July. So we are about to raise 3 million in July. And last but not least, we are looking for investors that might be interested in funding the project in Berlin. So as I've told you, we work together with family offices, but there are still some ticket sizes open. And I guess that's it. Thank you.
Thank you, Simon. Very interesting project. Okay, let's. Who wants to start with the feedback now? Zakaria or Lawrence or Daniele?
Simon, on your vertical towers, are you using an elevator system or a ramp system?
What would you say is the difference between an elevator system and a ramp system?
A ramp
Maybe.
is when you have a concrete ramp that goes in circles all the
No,
way up.
okay, so no. Thanks for clearing it. Yeah, no, it's an elevator system. So you go in on the ground level, and then we have like platforms on a rotary parking system, and then the cars are automatically stored and rotated within one of these systems. So you don't need any ramps or stuff like that around.
Okay, because efficiently you couldn't build these towers this small and have ramps. It had
Yeah.
to have some type of lift structure. So you have an automated parking garage like we have in the US.
Yep.
They build those often, but underground, you're building them above grade, which makes sense. You said the materials are frame. I would assume you'd need a concrete or steel mix to build something that could carry these weights.
Yeah. That's true. So we need most of the materials actually steel work, and then the facade is quite flexible. You can put some whatever you want on it, but most of the material it's just simple steel work. Yeah.
Yeah. We're investing in a company, it's in Mexico, but we're going to move it into Dallas. They built these panels that are as high as 40 feet tall and 20 feet wide. And they're like 5 times the tensile strength of normal concrete in their panels. It's actually a patent out of France. If I can get the name of the parent, you might be able to, get the factory panels from France and send to Berlin. But the cost of the construction is about 30% of steel. So it would reduce your costs, at least for the facade, dramatically. And you can do some pretty contemporary things with concrete panels. You can paint them any color you want. You can make them look like marble. You can do just about anything with concrete today. So, you can get it to have a mirror effect, so it just blends in with the rest of the area even. You can do very creative stuff with it. We like it because it'll reduce our costs dramatically to build multifamily properties in the Texas area where we're very active. It cuts our costs down almost 40% compared to building stick. It might reduce your costs as well.
Sounds great. Yeah.
Are you trying to use any type of alternative energy systems like solar or geothermal to
So we are going to have solar. We're going to have solar on the roof and also on the facade. But this really depends on where it is located in the city, because you need to make sure that we have, of course, enough solar capacity. And but we expect to have like about 20 to 30% of the total energy consumption can be covered by like these solar panels. It's not going to be like fully self-sufficient through solar, but it's going to be a very interesting add-on. Especially, we are currently experimenting with battery storage systems, and with that we can maybe increase the total of about 40 to 50% of the energy consumptions through like energy coming from solar panels. So we're working on it, but it really depends on the location, because some of them you don't have enough sun to really get a lot of energy.
Yeah, there's a new battery system called iron phosphate lithium, and they're used for the M1 Abram tanks now because they're fireproof, unlike just the simple ion lithium batteries. You might want to check into those. There's 4 or 5 different manufacturers that make those now. So that might be helpful to you.
Yeah. Thanks.
Okay, thank you, Lawrence. Zakaria?
Yeah, following up on Lawrence's comments on using solar panels, I think there's a company called Solarix that we've used in some of our assets to have panels on the facade so that we can replace some of the electricity generation. So I don't know if you have a solution for facades, but happy to make the intro there.
It's very interesting that you say that, Zakaria, because we met actually Jesper. Maybe you know Jesper Promet.
Yes, indeed.
And we met him at the I think it was in Dubai or somewhere. And we met him, and we met last year here at a big fair in Munich. So we're already in contact, and their solution would be great for us because they look very nice and they have very strong. Their optics are very good. So we're already in touch. But thanks, because it's like a very good company. Yeah.
Yeah, perfect. Because I thought the aesthetics is actually a big difference for your project. Another thing I think that you could actually use in your conversation with them is that They have good contacts with the municipalities when you expand to the Netherlands because they're quite sustainable, etc. So all of their clients are usually might have, let's say, a piece of land that they could do a sell and lease back on if you want to expand. And I'm also thinking, should the expansion happen in the Netherlands, it could be something that I think our Dutch team could be interested in looking at. So not at the equity of the company level, but more if there is a fund dedicated, let's say, to the Benelux or something. So I'm happy to make the connection, and then so let's see if we can work something out for your expansion towards the Netherlands. And
if you want to, I can send you afterwards. We have like so in a very early stage, but we are in very close contact with the city of Rotterdam, and with them we are currently evaluating two or three very nice locations. And as you said, they are very open, and they have a very strong need for EV charging capacities. And so maybe I can send you these studies, and then you can maybe if you want to connect it internally to your team, because if this works out, we are looking for project funding there.
Perfect. If you just shared my email, if you could send me the deck of the company and the info on the project in Rotterdam, and then I'll just forward it.
Perfect.
Thank you. Daniele, do you have some comment or questions to add?
I don't know. Personally, I've been looking at this parking system with big interest where I'm based in Asia, but never saw a real pickup for some reason. What is your special ingredient compared to your competitors? Because you are not the first one, and you will not be the last one, probably. What makes you different from others?
Yeah, I mean, what we've been trying to do in the past is really to focus on to reduce the maintenance and repair overheads, because that's a lot of people are kind of afraid that if they invest in a machine or in a system like that, is that they have to pay very high maintenance and repair overheads. And we've worked very hard in the last 3 years to reduce it. And the second thing is basically that we strongly focused on bringing EV charging technology into the platform. So it's not really an art, or it's not easy, but you can build one of these rotary parking systems, but to really bring in the EV charging technology with a very small footprint, this was kind of complex. So we have, if you look at all the systems around the world, we were able to bring in the charging infrastructure for cars and have the smallest footprint on the market. And that's actually very important if you look at these dense urban areas or the areas that we're interested in, is that we have a very small footprint to place the system. So these, I would say, are the two USPs that we've been working on.
Yeah, agree on that. And very interesting, very, very interesting. I'll drop you an email, my email, and please reach out and have more discussion. I might be able to connect you to some interesting stakeholders here.
Will do. Thank you.
Thank you.
Okay, thank you. Thank you, everyone. Thank you, Simon. This was the last
Thank you, guys.
presenter tonight. So good job, everyone. It was really interesting. We had a nice conversation going, I think. And so Madite, my colleague, will be sharing the contact list in a couple of days to all of you. So you can connect with each other after the call, and we will also share the recording to the YouTube. And yes, so we will be happy to stay in touch with all of you. So let us know how things are going from your end and with your fundraising. And we have events coming up, many different events coming up, actually. Like so you're welcome to join to more events. And so it was a pleasure meeting you all. And I hope you enjoyed this evening as well. Yes. Great. So see you all soon, and have a good evening or good day.
Thank you all. Have a good evening.
Thank you very much.
Bye.
Cheers.
Good night. Good night,
Bye-bye.
everyone.
Thank you. Bye bye.
Night.
Great meeting here. Bye.
Great meeting you guys.